Hello, everyone, and welcome back to my channel. I will be doing the CSEC Principles of Accounts, May June 2020, Paper 1. This is part 2 video. So if you have not yet watched part 1, there's a card somewhere on this video to my right. You can go ahead and click it and watch it and then come back and watch part 2. But for those of you who have already watched part 1, you have been making this request for quite some time. And I took the time out of my busy schedule to prepare this video for you. Also, if you are visiting my channel for the very first time, a warm welcome. And please go ahead and hit that subscribe button and turn on your notification bell so that you know when new videos are being uploaded. Also, you will be noticing that ads will be playing on your video. As I have been always saying for the past few videos, that I know that they pop up sometimes when you're really into the lesson. But in order for you to express your appreciation for the hard work, just avoid skipping these ads. Just take a little break during this time. So give this video a thumbs up by pressing that like button so that this video can reach as many students as possible, because we know exam is just a few weeks away from today's date. So let's get as prepared as possible. So let's get into this paper. So we will be picking up from question 33. So here we go. A lot of you have been making this request. So the question, in fact, this video, in order to help you to be as ready as possible and to help you to get as much practice as possible, I will be allowing you about 2 or 3 questions, maybe about, so that you can practice on your own, and then we can have a conversation in the comment section as to the answers to see if they are correct. And I'll try and respond as soon as possible because I really do have a busy schedule. But nonetheless, let's get into this paper. So the first question on 33 says, item 33 refers to the following information about the operation of a firm. Provision for doubtful debts on 1st of January, $700. Receivables on 1st of January, $30,000. Receivables on 31st of December, $25,000. The provision for doubtful debts is calculated at a rate of 2% of receivables. So here's the question. What amount would be charged for the provision for doubtful debts for the year ended 31st of December? Is it A, $200, B, $500, C, $600, or D, $700? For this very first question, it is so easy that I am going to allow you to work this out and let me know in the comment section how you arrived at the answer, because I want to test your knowledge to see how much you understand the concept. Let's go into question number 34. How does an increase in bad debt affect a sole trader's financial statements? Is it A, decreases the gross profit, B, increases the gross profit, C, decreases the net profit, or D, decreases the net profit? Now, we know that this is a question that it has been repeated. So this one, we know the answer is C. It actually decreases the net profit. That's what an increase in bad debt, how it affects a sole trader's financial statement. Let's go to number 35. A company's rent account had an opening debit balance of $2,000. During the year, $6,000 was paid for rent. At the end of the year, there was a closing debit balance of $1,500 in the account. What was the rent expense recorded for the year? A, $6,000, B, $6,500, C, $7,500, D, $9,500. Well, we know that the opening balance, as it says, it was $2,000. Now, during the year, the rent paid was $6,000. So that would give us a total of $8,000. But it says at the end of the year, there was a closing debit balance of $1,500. So what we simply do is deduct that $1,500 from the $8,000. And that would give us B, $6,500. So B, $6,500. Let me go back here and highlight this for you. 34C. Let's go on now to question number 36. M. Brown wishes to increase her provision for doubtful debts from 8% to 10%. Accounts receivable at the end of the year totaled $10,000, whilst the balance in the provision for bad debts accounts is presently $800. Which of the following entries would be correct to record the provision for the year? Is it A, debit profit and loss account $720, credit provision for doubtful debts account $720, B, debit profit and loss account $800, credit provision for doubtful debts account $800, C, debit profit and loss account $1,000, credit profit and loss account $1,000, D, debit profit and loss account $200, credit provision for doubtful debts account $200. So first, it tells us that there was a provision for doubtful debts, 8% and 10%. So what we simply do, we find 8% of $10,000 and we will get $800. Then we find 10% of $10,000, we get $1,000. And we simply deduct the $800, subtract that from the $1,000, we're left with $200. So therefore, we know that we are going to debit profit and loss account $200, credit provision for doubtful debts account $200. D would be our answer. Let's go to number 37. The balances of the asset accounts of the Bay Row Club as at 30th of June 2019 were premises $5,400, equipment $1,825, furniture $960, bank and cash $1,640, inventory of refreshments $72. So the amount of its accumulated fund was, so we know that would give us a total. There's no liability. So all our assets, when we add that up, we would get B 37, sorry, D 9,897 for our accumulated fund. 38 says, A. Jones by mistake debited C. All's account instead of F. All. Which of the following corrects the mistake? So actually, we know that it was a mistake, so we would have to debit the suspense account and credit to correct the mistake and credit F all account. So D would be our answer. Let's go to items 39 to 40. Refer to the following statement of financial position provided for a firm as at 1st of January 2019. Bank, $3,000. Receivables, that's the blank. Inventory, $1,000. And then on our credit side, we have payables, 500, and number 2, which is blank, $5,500. So 39, what sum of money is represented by 1? So all we know, we simply deduct the debit side from the credit side. When we notice the credit side is the highest, it has a total of $6,000, and therefore our debit side is $4,000. So when we deduct or subtract 4,000 from 6,000, we're left with $2,000. So we know receivables, so that the accounts can be balanced off, we know it would be B, $2,000. Let's go on to number 40. Which of the following accounts is represented by 2? So we know on our credit side, we know we have account payables, and then we also have, if you said capital C, then you are correct. Let's go to number 41. Item 41 refers to the following information relating to Harvard Sports Club for 2019. Number of members, 50. Annual subscriptions, $50. Subscriptions owing at the beginning of the year, $450. Subscriptions owing at the end of the year, $150. 41. How much was collected in subscriptions during the year? So we simply find the product of the number of members, and we multiply that by the number of subscriptions, which is $50 each member paid. So that's a total of $2,500. So B would be your answer. Let's go to number 42. 42 says, Mr. Miguel's capital on the 1st of January was $40,000, and on 31st of December, $85,000. He withdrew $1,000 in inventory during the year. What is his profit for the year? Is it A, $5,000, B, $46,000, C, $125,000, or D, $126,000? Now, we know that when we on our debit side, it tells us that the capital, it was $40,000, and he withdrew $1,000 from that for inventory. So we deduct that from $40,000, and that's $39,000. And therefore, when we deduct $39,000 from $85,000, we are left with $46,000. So B is the profit for the year. Let's go to 43. W, X, Y, and Z are partners, sharing profits and losses in proportion to their capital. The capital of each partner is shown below. So here we have our parties and our capital. So W, $300 capital, X, $200 capital, Y, $100 capital, and Z, $300 capital. What would be Z's share of the profit of $7,200? Is it A, $2,400, B, $1,800, C, $1,200, or D, $800? So it says Z's share, so they are specific. So first of all, we have to calculate the amount in total proportion. So the total proportion, when we add all the capital, we actually get $900. So what we simply do is find Z's share out of the total proportion, and we find that as a product of $7,200. So we would have $300 over 900 times multiply by $7,200. And when we simplify and calculate that out, We get A, $2,400. Let's go to number 44. Which of the following accounts shows how profits and losses are shared among partners? A, current. B, appropriation. C, profit and loss. D, income and expenditure. So we know the answer is B, appropriation. Let's go to number 45. Mr. Smith does not keep proper records. He began his business with $10,000 in the bank. He uses his vehicle and building worth $6,000 and $15,000 respectively as part of his business. Customers owe him $4,000. He withdrew $1,500 for personal use and owed suppliers $2,000. What is the closing capital of the business? Is it A, $25,500, B, $28,500, C, $31,500, or D, $33,000? Now, as I said, this is an interactive video discussion, so I want you to work out this one as well, number 45. Let's go to number 46. It says, which of the following features is associated with private limited companies? A, they are family owned. Shares are not sold publicly. C, financial statements are published. D, government agencies purchase shares. We know private limited companies, they are often family owned. A. 47 says, capital at the start of a trading period was $20,000 and at the end of the period it was $22,500. The net profit for the period was $6,500. How much money was withdrawn for the period? A, $2,500, B, $4,000, C, $6,000, or D, $9,000. How do you arrive at this answer? Would you like to work this one out as well? What do you think? Well, we know this one is pretty simple and easy. So I'm going to allow you to do this one as well so that you can get ready for your exams. All right? So that's just about 3 you have to do. 48 says, according to the Partnership Act, if there is no deed of partnership, the amount of profit to be received by each partner would be A, in equal share, B, 5% of net profit, C, 5% of capital invested, or D, in proportion to capital invested. We know the answer is A, in equal share. Let's go to 49. Here it says, item 49 refers to the following information. Inventory at the 1st of January 2019 is 1,500. Purchases during the month, 1,200. Cost of goods sold, $1,400. What is the inventory at the end of January? Now we know this question is a question that has been repeated. So we have our opening stock 1,500. We add our purchases 1,200. That's a total of $2,700. And we less our cost of goods sold, which is 1,400. And therefore, we arrive with the inventory of 1,300D. 50 says, which of the following items is not recorded in the appropriation account of a partnership? A, interest on capital, B, share of profits, C, drawings, D, salaries. Now, interest on capital, share of profits, and salaries are recorded in the appropriation account of a partnership. So the one that is not is C, drawings. It should actually be interest on drawings. let's go to number 51. When a company declares a dividend of 15%, the dividend warrant of a shareholder owing $1,501 ordinary shares is A. $100, B. $225, C. $1,500, or D. $1,515. Now, $1,501 ordinary shares, that's still 1,500, and we simply find 15% of that. So 15% of 15% of $1,500 is actually, what would we arrive at? I think the answer is B, $225. 52. Item 52 refers to the following information. Jane and Mary are in partnership sharing profits in the ratio 3:2. The following balances are taken from their books. Net profit $23,500. Interest on capital, Jane $2,000. Mary $1,000. Salary for Jane $2,500. Drawings, Jane $500. Mary $1,500. Interest on drawings, Jane $15. Mary $45. Now, the question for 52 says, how much money should Jane receive as her share of the residual profits? Is it A, $9,636, B, $10,836, C, $10,800, D, $16,254. Now, I had given you one of this question in one of the previous past paper that I have done already, and I recognize that you weren't able to work it out to tell me the answer. I think some of you had requested me to work it out for you. So therefore, I'm going to break this one down. I'm going to work it out for you so you can understand this question. So what we simply do, we know our profit and loss appropriation account. So we recognize that this is for Jane and Mary. So Jane and Mary profit and loss appropriation account. Now our first thing we have is our net profit, 23,500. Then what we do is we add our interest and drawings. There we have Jane $15, Mary $45. So that's a total of $60. And we add that $60 to our net profit and we get $23,560. What we do next is we less our interest on capital. And there we have Jane $2,000, Mary $1,000. And that's a total of $3,000. Then we have our salary for Jane, $2,500. And what we do, we simply add our salary with our interest on capital, and that's a total of $5,500. And we subtract that from our $23,560, and we are left with $18,060. So what we do now, next we move forward. So that's the $18,060 is actually the remaining profit or the residue. That's it in the accounting term. Now, it mentioned the share of profits after. So next we are going to do the share of profit after appropriation. So in the beginning, they say the ratio is 3 3 to 2. So Jane is 3, Mary is 2. So that's a total parts of 5. So Jane would be 3 out of 5 parts of the remaining profit residue, which was $18,060. So 3/5 of $18,060 is 10,836. So B would be your answer. What I am actually going to do for you, I am going to type it out, the format for you in the comment section as soon as I possibly can for you to see the breakdown of what I have just said, how it should look in your accounting layout. So if I don't do it right away, but as soon as I possibly can, I will type it out in the comment section for you to see. Let's move on to number 53. It says P. Amos is employed by a construction company at a rate of $7 per hour. During the week of 6th of April, he worked his basic week of 40 hours. The income tax due on his pay is $20, and he is also liable to pay Social Security contributions of 5% of his gross pay. What is his net pay? Is it A, $246, B, $260, C, $266, or D, $280? So, what do we do? Well, we're given the rate per hour, which is $7. He worked the basic week of 40 hours. So 7 times 40, that is $280. Now the income tax, we have $20. And it says now we're looking at our deductions. It says 5% of gross pay. So 5% of $280, that's $14. So the total deductions would be $20 plus $14, that's $34. And we subtract that $34 from his gross salary of $280. So 34 from 280, we are left with $246. A. Let's go to number 54. What is the maximum capital a company can raise from selling shares to the public? A. Issued capital, B. Paid up capital, C. Authorized capital, or D. Subscribed capital. So we know that we know the maximum capital that a company can raise from selling shares is actually C. Authorized capital. 55. Item 55 refers to the following table of a prospectus issued by a public limited company offering shares for sale at par value. So types of share, number of units, and the par value. So we have ordinary, 5% preference, number of units, 200,000 and 10,000. And then the number of units, the par value is at $2, and the 10,000 number of units is at par value of $5. 55, the question now said, if the issue was fully subscribed, how much capital did the company raise? A, $40,000, B, $45,000, C, $400,000, or D, $450,000. So what we simply do, we find 5% of $400,000 and we get $20,000. And then we find 5% of, sorry. So what we first do, let me go back over that again. So first we have to multiply our par value by the number of units. So $2 multiplied by 200,000 gives us $400,000, and we find 5% of $400,000, that gives us $20,000. Then we multiply the $5 by the $10,000, 10,000 units, we get $50,000. And we find 5% of $50,000, we get $25,000. And we simply add the 25,000 to the 20,000 and we get $45,000. So B would be our answer. Let's go to 56. Which of the following will result when opening inventories of raw materials are added to net purchases of raw materials? A. Prime cost. B. Production cost. C. Raw materials used. D. Raw materials available for use. So we know that it is C. Raw materials used. Let's go to number 57. Item 57 refers to the following data which pertain to Tarisha Ali, an employee of a bank. Monthly salary $3,500, overtime $800. Income tax rate 25% on every dollar above $2,000 of monthly salary, 30% on overtime earned. So the question for 57 says, the total income tax to be deducted from Tarisha Ali is A. $615, B. $740, C. $875, or D. $1,075. So what we simply do, we first have to, it says the monthly salary was $3,500, but then it says 25% on every dollar above $2,000 of monthly salary. So we simply deduct $2,000 from the $3,500, which gives us $1,500, and we find 25% of $1,500, and that will give us $375. Now there are some additions that we are going to do. It says 30% on overtime earned. So 30%, which is of $800 overtime. So 30% of 800, that's a total of $240. So we simply combined the two figures, 375 and 240, and we get $615. So that's the total income tax that was deducted. A. 58 says, which of the following items is not considered a source document for payroll? A. Clock card. B. Medical certificate. C. Attendance register. Or D. Electronic time card. We know the answer is B. Medical certificate. Let's go to 59. Item 59 refers to the following information provided by a business. Total unpresented checks, $120. Lodgement not entered on bank statements, $150. Balance per cash book, $560. What is the balance per bank statement? So we know in our bank reconciliation statement, we have our balance as per cash book. We know that's $560. Then we less lodgement not entered on bank statement. That's $150, and we get $410, and we add unpresented checks, $120, and that gives us a total of $530 D. There are two different style or ways you could have worked that, and you would have gotten the same answer. Our final question says, the net profit of a firm was shown as $1,600. It was later discovered that discounts received were underclassed by $10 and purchases were understated by $36. What is the correct net profit? A. $1,574. B. $1,610. C. $1,636. D. $1,646. So what do we do here? Well, we know that our statement, our statement of corrected net profit What do we do here now? Now, first of all, we know that our net profit, actually before adjustment, as it says, is $1,600. So we are going to add our discount received that was undercast by $10. We're going to add $10 to that, and we get 1,610, and then we are going to less our purchases that were understated. So when we less $36 from $1,610, we are left with our corrected net profit of $1,574. A would be your answer. So there you have it. We have completed the May-June 2020 paper 1. Thank you so much for watching.